Futures point to a lower open while the U.S. dollar shows significant strength following Greek and French election results and renewed global economic concerns. In equity-related news, Facebook kicks off the Investor Roadshow for its IPO. I'm Jill Malandrino, and the morning call starts right now.
Good morning, everyone. I'm Evan Lazarus with T3Live.com.
And I'm Jill Malandrino, and together we bring you the morning call. Evan, we have a lot going on to kick off the week. The markets are under pressure. Facebook is shopping around its IPO today, but you know what? The markets did not react well in the overnight with the French and Germany elections, so I think we're going to kick off this week a little bit shaky here.
Yeah, it looks like it. We started, I actually was looking at the futures last night. We were down much greater than we are as we currently speak. We were down, I think, about 17 handles. Last I checked, we were down about 7 or 8. So coming back a little pre-market here, which is good. But market definitely under pressure. We talked about this last week. Thursday and Friday of last week were pretty nasty. Especially Friday, we saw a big breakdown on Friday, gapping down and just trading lower the entire day. The market does need to, hold this 1355 level. This has been our short-term support. Now, my gut tells me that we trade right through this level. I just don't see how this is going to hold. We could do it early this morning, and then potentially what markets like to do is they like to break support and then they like to snap back. So there could be, in the next day or two, a little bit of a bounce back, if not today. But the market then might reset up again, which is what I fear. If we break this 1350, with some volume, the market could be telling us, it wants a lot lower over the next couple of weeks. Typically, market corrections last about 6 to 8 weeks, so we're just at the very, very beginning here. Keep that in the back of your mind. If the market wants to go lower, it's had a great run. It wouldn't be unhealthy, wouldn't be unexpected. So keep that in the back of your mind. If we do break this 1350 level, we could see as low as 1280, 1290, 1300.
I just think it's really interesting how the market's been reacting overall. People are either selling on the news, but I think it should be trading more around the reaction, because even though we're down 17 handles, come back and only be down 7 or 8. This just kind of lends to itself how you have your initial reaction and then sort of coming back with more rational, cooler heads prevailing.
Well, the interesting thing here is just the idea of leadership. Markets need leadership. I've been talking about this for weeks. And when you look at the leaders, especially Apple, which is our biggest leader, not participating, leaders will lead you up and leaders will lead you down.
Right.
So you need to keep that, sort of in the very front and center of your activity each and every day. If we don't have leadership, especially now that earnings season is coming to an end, this could be a perfect time for the market to, sort of pull back and trade lower.
And speaking of leaders, we're going to look at the sector spotlight, where there really weren't any last week except for one, that being telecom services, which was only up 0.06%. So you could see how the entire market overall is under pressure, and we're back to a highly correlated market where it's going to be a little bit tough to pick your spots here. Let's take a look at the Qs and see how tech performed last week.
Qs, okay, very status quo in line with some of the other broader indexes. Obviously, technology-driven Qs here, pushing much lower on Friday of last week, back to short-term support, which I really wouldn't give that much credit to. You have this really small level down here around 64.5. I suspect we'll take that out even at the open. Our next level of support in the Qs is down here around 63. So again, the Qs have room to go lower. There is room to take this market down. It is a market where you're either going to participate from the short side and find compelling, short-term short trades if that is, part of your risk profile. If it's not, this is a market you want to step aside and probably go to cash. Okay,
taking a look at the financials. This one was down 2.73% last week, the XLF, breaking some key areas of support as well.
Well, I want to look at the XLF because I think the banks are an interesting area. The banks get so much attention and they're looked at and there's so many eyeballs there. But I want to look at them two ways. I want to look at them short term. Short term, the banks, the XLF, if we break this $15 mark, there's room to go lower, and I suspect that'll probably happen. But what I really want to do is look at them a little bit longer term. This is actually a monthly chart here I'm going to show you. So this goes back, a whole bunch of years. You can see with the XLF, what was the panic and chaos of, 2008, our 2009 lows here, our snapback. We never really got past this point, which was right about $17 in the XLF. But that's not really the interesting thing. The interesting thing here is that the banks and financials have significantly underperformed. As the market, has come all the way back to close to those 2008, 2007 highs, If you look at the S&Ps, the banks haven't even come back 50%. So significant underperformance here in the banks over the last couple of years. And since 2010, we really have languished. A lot of these banks have been in a very, very tight sideways trend. Not really a lot of buying here, and I suspect we may have just seen our first lower high here in the XLF. So really, really an area that I want to pay a lot of attention to going forward. If these start to break down, could pick up some speed to the downside.
Well, I think if you had to pick any area within the financials, I'd probably take a look at the regionals, if anything else. But those huge brokers with those large market caps, that's what's really applying the pressure to this particular space. We're going to move along to the OIH, the oil and gas sector. That had a lot of busy news last week. We had the ConocoPhillips 66 split, which I think is going to be very interesting to watch how it plays out. Delta buying a refinery from Phillips 66, that new ticker being PSX. And then you had the whole Chesapeake debacle last week, which really showed some pretty poor light on the management situation going on there.
Well, we're going to, again, the OIH underperformance. It's been breaking down for a while. The story's not new here. We're going to look here again at the monthly, just get a bigger picture of the OIH. This, to me, over the last couple of years, has been building a pretty ominous head and shoulders pattern. Here's the top of the head. This, where we're at right here in the structure would be the right shoulder. There's really not a whole lot of support to the lower 30s. I suspect you're going to see that in the days and weeks ahead here in the OIH. If we go short term and look at the daily chart, big volume spike on Friday to the downside as OIH is really, really pushed.
There's like crude coming down.
Yeah. Yep. So this to me is a sign, both short term and long term, that this one's lower. For anybody that's looking to short, this is probably going to be a decent short in the days ahead if it can set up, build some sort of low-level base. But if not, I wouldn't be putting money to work here.
Moving along to the healthcare sector, this is going to be a really interesting one to watch through the remainder of 2012, at least through the elections anyway. That's always a big sector during an election year. And then we also have the headlines that are coming out regarding Obamacare.
Well, we're going to look at the XLV, which is the ETF that measures healthcare. There's lots of different stories going on within this sector with different names, and especially with all the political news, with Obamacare. So lots of eyeballs here. It's been a very good trade. You've seen a nice steady rise over the last since basically December, November of last year. Has performed very, very well. We did see a minor breakdown on Friday with the market. Volume did come up. We need to pay attention here as it could be short term, looking for a pullback. There's not a whole lot of support in the XLV to the 35, 36 level. So there's room to go lower. So it's again falls into that category of be alert, be ready. You might just want to take any profits if you have them here, or look for potential cute short as the Red Dog.
As Red Dog would say. Let's wrap it up with the industrial space. This was another one. A lot of totally under complete pressure. Right now, everything is talking about China demand. What's going to happen over there in terms of them continuing to spend on capital projects, and this is why we've seen some significant pressure in this sector specifically. Industrials
have been great, have performed very, very well with the market. Again, long-term chart here, 2009, lows all the way back, to the primarily where we broke down from. So it's been a very, very good performing sector, over the long run, which is, more than I can say for some of the other things that we've looked at today. But short term, again, in that area where it's found some resistance in this upper 30 area, could be on alert here for lower prices. Wouldn't surprise me if we did see a little bit of a breakdown or a pullback here in the short term.
Okay, all right. Well, we're looking at a lot of downward pressure on almost all of our sectors this morning. We're going to jump into a quick commercial. When we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches and take a look at the retail space following same-store sales last Thursday. This group has been doing pretty good. If you have to pick a spot for some outperformers, there's some really good names if you want to do some bottom-up analysis here. Let's take a look at Lulu. This company has done a fabulous job capitalizing on the $6 billion yoga industry, now reaching that $1 billion mark in revenue. They've done a great job here. They absolutely have They own it in terms of pricing here. Not even like a Nike could be competitive with it. They're more of an alternative than anything else. But does this name still have room to run?
Lulu's been a great stock. It's been a great trade for multiple people, short-term traders, investors. It's done nothing but make higher highs for the better part of the last year and a half, 2 years. It's got a great looking chart here. If we look at it short term, had a nice run here from 70. We broke out above prior highs, middle of last week. Volume, came up ever so slightly, which is what you want to see on a breakout. So technically, doing everything it's supposed to do. Obviously, if the market goes lower, it's gonna, there's gonna be pressure here. Nothing is safe when markets, go down. So I really want to see the stock hold this 75, 76 area today and tomorrow. If it can do that, you might see another active trade to the long side for another new high. But if it really, starts to break below 75, you start to see volume come up a little bit. All bets are off.
All right, moving along to another performance name, Nike. This is another group where, they've entered that yoga market, but they just haven't been that leader like Lulu has been. However, with Nike, they are the king at rebranding and re-releasing names that have done really well, like the Jordans, for example. They just signed that deal with the NFL, and guess what, guys? Olympics are right on the horizon as well.
So Nike's been a great trade as well. It's, again, falls into that retail sector. A lot of money inflow there. But again, Friday, breaking down ever so slightly. It's had a nice run, made new highs, just like Lulu, almost identical looking pattern here, breaking the new highs Wednesday and Thursday and, tailing off on, some elevated volume there on Friday. So it's at this critical level where it needs to be watched. It has to hold this area. If it can hold in this general area over the next couple of days, if the market, stays under this sort of pressure, we could see another trade there to the long side.
Right.
So if you're looking for a place to keep an eye on for the long side, it's definitely in the Nike Lulu retail space.
Right.
But it's at a critical point right now.
Yeah, I mean, all we need is basically we just need volume, and no one really cares what direction it's moving. We just need the volatility, so as traders we can come back and do something instead of sitting on the sidelines.
That's right.
Moving along to the department stores, we're going to take a look at Macy's. This is the favorite for those that are looking for a dividend. It just doubled its dividend, and this particular name has the highest margins within its peer group.
Well, Macy's looks good. I like Macy's here. It fits into this category of we're going to keep a close eye on it here in the market. If the market can start to rally, look to see how some of these names act. Macy's is one of them. Holding the highs, which is a very positive sign. Even on Friday, as the market really took a beating, Macy's held in for better part of the day. So could be telling us that it wants higher prices in the near term. Definitely a stock to watch. Moving
along to JCPenney, they hired a new CFO last Thursday. They made that announcement, and he starts his new job today. Has a pretty interesting background. Comes from names like GE, Boeing, McDonnell Douglas. So, maybe he can turn things around as they now have the ex-Apple management and team as well.
Well, I suppose we'll see in time. Obviously, if we look at the chart here, JCPenney, price is price, and that's really what matters the most to us. Price came off on Friday. Not a great looking chart. As it rallied to start the year, kicked off the year with a real bang. Big move early in the year into the low 40s, but right back down now to the low 30s. So it's done nothing but really sell off over the last couple of months. If it can't hold this low 30 level, could be setting up for another spike down. There's room to go lower here, and certainly with the price action of last week, we saw this quick little 3-4 day move up. Failing again and coming right back down. So what price is telling us is it's just not ready for the big dance yet.
Well, what they need to do is they need to start executing on that merchandising effort that they have and not look so Sears-ish, if you will.
Well, I suppose we'll see that, maybe into next earnings quarter.
Right. I mean, these things take time to play out. Anyway, moving on to Coach, one of my favorite names to shop for anyway. Okay. The key here is China. The demand there is just really off the charts for them. And they're also doing well on the men's business accessory space. They had a great quarter, and the chart clearly confirmed that last week.
Yeah, I mean, Coach has been one of these luxury goods names, performed very, very well. Seeing as high as 80 mid-March, now we're back to the low 70s. I don't love the way this is setting up. You see these consolidations, and then we break down, and then it consolidates again. So it looks like we're at the start of possibly another breakdown leg here. I don't like the way this candlestick looked on Friday, so we could want to test these prior lows just a hair below 70. If it does get through the 70 level with some volume, it has room to go back to even the low 60s. So don't get caught up in the story. Let's trade the price action. If it can, turn back up and get above the 75, 76 level with some volume behind it, you could see that trade to the long side. But right now, it just doesn't look like it's happening.
All right, let's move along to quick hits or some quick cash. We're going to kick it off with IBM. This is one of mine and Evan's favorite to trade. We did really well with this one last year. I personally still love it. I was on the air last Monday saying I'm continuing to buy even at these levels. They have that nice dividend that they just brought up to 13%. That's 85 cents per quarter. They announced that share buyback going through 2015. They're continuing continuing to grow via acquisition in that key analytic and software space. But Evan, what's that chart telling us now?
So let's take a look here at IBM. It is, a bellwether tech stock and one of the larger components in the Dow. It has been a great performer. It's made a lot of people a lot of money. It's been, a buy the dip type of stock for a very long time. You can see we have this, trend line going back to, the middle part of last year. To me, it looks like it could contend and pull back to lower, test this $200 area. It did fail to make a new high. I was keeping an eye on it last week as it sat here just under this previous 52-week high. And the market came under pressure, and so did IBM a little bit on Friday. There's really not much to say here other than, if it's going to go higher, I'd like to see it do it, turn back up in the days ahead. If the market can see a short-term bounce, look to IBM to see how it performs. If it can't really get through this 210 to 11 mark, we could start to see a drawdown back to these prior lows, which are right around, 195 to 197.
All right, moving along to LinkedIn. This is one of those IPO names that Red Dog has been talking about, that Duncan Groupon. He loves trading those type of names. But LinkedIn is definitely going to get a look this week because we have that Facebook IPO being shopped around.
Well, there's going to be a lot of news here. There's going to be a lot of chatter. LinkedIn, Facebook, this whole sort of social media thing that this market is very, very excited about, and the media is very excited about. As traders and investors looking to commit capital, you have to pay attention to price here. LinkedIn had a good earnings report, very well received by the market, gapping up on Friday, holding most of the gains. The market was under pressure pretty substantially on Friday. So, rather impressive in my opinion. It was able to just, stay in its trading range. It didn't really break down. Again, we'll see what happens into early this week. It is at prior highs. You can see IPO highs here. This is, I think 122, 123 was the IPO price high the day it actually went public to the marketplace. So we're back to that level. There's going to be a lot of eyeballs here in this area. When it came up here, you can see that there was some resistance. It pushed it all the way back down. So we have to respect this marketplace, respect your charts. The 120, low 120s could find a short-term resistance area. There's definitely going to be some sellers up here, as it could be a sell the news type of event. Keep an eye on it. I'd like to see this stock, if it's going to go higher over the next couple of weeks, really build a high-level base. Start to, say that I can hold this ground. I like this area. I can trade higher. If we can do that, I'd be a lot more interested in being a buyer up here.
All right, moving along to Apple, and you mentioned this earlier in the call that, with this particular market leader, and this is just owned in for all of Q2, we saw a little bit of the inverse relationship where the market was performing and Apple wasn't in April. So as this could take the market up, it can certainly take it down, and the name was down 6.3% last week. So do you wait for it to show a little bit leadership to the upside, or is this a good place to get in?
Well, we talked about this last week. Markets need leadership to take you higher. This stock has been that leadership. When that leadership starts to crumble, leadership will take you lower, and that's kind of what you're seeing here. I've said for a very long time, even me personally as a trader, so goes Apple, so goes the market. It is my number one index without actually being an index, because I really think that this is such a driver. It's so heavily weighted, and there's so many eyeballs, and there's so much institutional money here that if money starts to come out, you're going to see markets trade lower with Apple. Great earnings report 2 weeks ago. It's done nothing but sell off since. Not really what you want to see. Although they're making money, and you can talk about the story of this stock for probably a very, very long time. The reality of it is we're going to make our money with price, and we have to respect what it's telling us. Pushing back to this gap fill area, which is right around 555, low 550s. We could be there as early as this morning with this stock. Thursday and Friday, we couldn't even get a one-day bounce here last week. So more than a one-day bounce, excuse me. So the second, this thing perked its head for just a little bit. I mean, we got like maybe a half a day of a bounce. Sellers came right back in mass and took us to lows. I suspect we're going to see lows, and we could trade down to the 530 area, 520 area. Again, you don't need to be looking to buy every pull-in this stock. Let it settle in. Let it show you that it's found a tradable support area before just trying to pick a bottom, pick a bottom, pick a bottom.
Right.
Because that trade, to me, is very, very dangerous.
Well, it's just interesting, like you're saying, it's almost an index of its own because it's such a huge barometer for the consumer as well as just the tech space. So we'll see how that continues to perform. We're going to move along to CAT. And as we mentioned with the XLI, the industrial names, they've been under a lot of pressure because of Chinese demand is just one of the reasons why. There was a story last week that BHP and Rio Tinto are pulling in the amount of money they're going to spend in terms of new Chinese construction spend, which clearly affects a name like Caterpillar, and you've seen that pressure come in on the name.
Yeah, Caterpillar's a name that I closely watch for my own trading. It's in a bit of a downtrend right now. You can clearly see that downtrend. What is a downtrend? Lower lows, lower highs, lower lows, lower highs. And this, this continues to go on and on and on and on and on. This to me doesn't really have any good, strong support until down in this, 85 to 90 area, which to me is probably where it's going now. I suspect it might, put in another short-term bounce, and you could see another lower high. It's right now for me, it's a good-looking short trade. I think it goes lower. It's telling us it wants lower. Again, in the very immediate term, today, tomorrow, Wednesday, you could see a little bit of a short-term bounce, which again will probably be an area for short sellers to come back in and again, take it lower. So not a very strong name, not performing very well, hasn't performed well for the better part of 2012, and it's breaking down ahead of even the market.
All right, well, let's wrap it up with MasterCard and Visa. Both of these names, they had blowout quarters, just absolutely crushed the numbers last week.
MasterCard and Visa, have been staple benchmark, strong leadership stocks. Seeing some selling last week in MasterCard. Volume came up a little bit, which does concern me here, but the trend is still very much intact. We look at a weekly chart. Really not much to say here. Higher highs, higher lows for the better part of, the last year and a half, 2 years. It does have this trend line. It, might want to come lower. I do think that, these stocks potentially could pull back with the market. And there is room for some downside here. A little bit of a reversal bar last week on some elevated volume, but nothing structurally, changing, no dramatic damage. You're seeing dramatic damage in other places. Hasn't really, happened in the Visa MasterCard space. This is, just a quick glance at Visa. Visa a little more, nasty last week. Big sell-off, big volume. There was some news that drove that. So we could see this, amount, if this doesn't really bounce over the next 2 days, and it does contract here at the lower end of the range, you could see another move lower. There is some open gaps here to the left, and there isn't really a whole lot of support till down, just maybe even below 100. So there is room to go lower if the stock sets up for that. We'll keep an eye on that. In the days ahead.
I think really what we have to take a look at is see if any overlying trends sort of develop, because we need that volume, we need the volatility to come back so we can start seeing some trades in the market. On that note, at the end of the day, guys, catch Evan as he wraps up the charts for us, lets us know what the market confirmed on Real Money, Options Profits, and T3Live.com. Have a great day trading.